This video is probably going to be one of the easiest strategy you want to start with as a beginner. Now, as a beginner, there are basically about 3 things you need to understand before you go into the chart so you wouldn't get confused. Now, the first thing first off is for you to understand market conditions. There are basically about 3 conditions in the market. That means whenever you open the chart, the market is either doing any of these 3 things. Now, is the market is ranging, market is trending to the upside, or market is trending to the downside. Now, if market is ranging, it's simply creating equal highs and equal lows. And if market is trending to the upside, it's simply creating higher highs and higher lows. And if market is trending to the downside, it is simply creating lower lows and lower highs. So whenever you open the chart, the market is either doing any of these 3 things. Is that it's trending, is ranging, or trending to the downside. Now, another thing to understand is market structure. Market structure is simply what tells us the pattern price is making in the market. Is price creating equal highs and equal lows, or price is creating lower lows and lower highs, or price is creating lower highs and lower lows. Now, for you to be able to identify this, you need to simply understand market structure. I'm going to show you on the chart, but before that, let's talk about the third thing, which is zones. The zones or key levels are simply areas that you want to take direction from, or simply areas that you want to buy or sell from. I'm going to show you all of this on the chart, but before we go to the chart, if you're seeing me for the first time, my name is Divine, and what I basically do on this channel is to document how I trade, and as well show you the mindset behind my strategy. If you want to see content like this, I want you to like, subscribe, and drop a comment. I'll be right back.
Now, here on the chart, we're going to identify market condition, market structure, and as well the zone we are likely going to buy from or we're going to sell from. So whatever we explained earlier on, we're going to do it step by step here on the chart. The first thing I told you is that you have to understand market condition. And for us to understand market condition, we want to simply know if market is in an uptrend or in a downtrend or market is in a ranging phase. And we want to do that on the higher time frame, like the daily time frame. So we're going to go to the day time frame and understand the market condition. Now, on daily time frame, for us to confirm if market is an uptrend, downtrend, or in a ranging phase, we simply need to understand how to use the trend line. The trend line is simply what tells us what market is doing. Is it trending to the upside or down, or trending to the downside, or market is in a range? Now, if you look at this previous chart here, you will see that at the point here and at the point here, market was in a range. That means market was simply moving from this point to this point. Market was ranging for days and even weeks. Market was in the range in this phase, and all you can see, this price expanded out. Now, if you look at this place now, you can see that for days again too, market was in a downtrend. Market was simply creating lower highs and lower low, lower highs and lower low, lower highs and lower low. Now, after market stopped doing these lower highs and lower lows, what the price are doing? Higher lows and higher high, higher low and higher high. So at this phase here, market was simply in a ranging phase by simply creating equal highs and equal lows. From this place to this place, equal highs and equal lows. And at this range here, price was simply creating lower lows and lower highs. And at this phase here, price is beginning to create higher highs and higher lows. Now we're able to identify the ranging phase, the trending phase to the downside, and the trading phase to the upside. What is the overall movement of this market? That's what we want to understand. The market is going to the upside currently, or market is going to the downside. Remember what we did earlier first. First of all, identify each type of condition in the market whereby price was ranging at this phase, price was trending to the downside, and price is trending to the upside here. But what is the overall direction of the market? Now I want to use our trend line to understand the overall direction of the market. And if you look closely here, If you look closely with our eyes, you can see the market is in a downtrend. But we like to tell the trend to tell us what the price is doing. And now, if you look closely at market trend line from here to this point, you see that market is in a downtrend, and this is the support level for that trend. And here is likewise the resistance level for that trend. So what we can clearly see that is that the overall movement of the market is that price is in a downtrend. And after we understand the condition of the market, which is saying that price is in a downtrend, what we want to do now is to understand the key levels where we're going to look at for market structure and all of that. Now, if you have to mark out key levels now, we want to simply mark out this area here to be a key level. This point the price got to price steady giving us a higher highs and a higher lows. Now, this point as well too is a key level, and the current position price is a key level. So here too is a key level. Now, what we want to work with now is simply the key level. So I'm going to remove this support trend line and resistance trend line because it has told us what we want to see in the market. The market is in a downtrend. Now, after I've identified market condition, which is saying that market is in a downtrend, what we want to go for now is to understand the market structure. Now, where you want to understand market structure is simply on the 4 hours time frame. Now, on the 4 hours time frame, we simply want to understand the pattern price making. Is price creating higher highs and higher lows, or lower lows and lower high, or price is simply an equal phase? So we want to understand that on the 4 hours time frame. Now, on the 4 hours time frame, we can clearly see that price is clearly showing us higher highs and higher lows. Why? Because if you look closely here, you see that price is simply giving us a high, sorry, a low here, and this is the high, a low, this is the high. That means price is giving us a higher highs and a higher lows on the 4 hours time frame. You know the market is in an uptrend. But now, on the 4 hours time frame, the market is an uptrend, and on the daily time frame, market is in downtrend. What do? We want to understand what price is doing at every level here to see if you're going to buy or you're going to sell by simply marking out the zones in this area. Now, zones you're looking at for now can be a demand zone or it can be a supply zone. And if you look closely here, on this last transaction that price occurred here, on this price action that price occurred here, price is giving us a series of demand zone. But now, because price is in an uptrend, we're going to be looking for a demand zone. And where is the demand zone? Demand zone is simply area that price make a reaction from. Now, if I study this trend, now if I study this market structure here, we'll see that price is giving us a rally, a base, and a rally. A rally, a base, and a rally. A rally, a base, and a rally. Now, when price go up to this recent place here, price give us a drop, a base, and a rally. So if you are looking out to buy from this trend now, where we're going to likely buy from is at this zone here. This zone is the zone we're going to likely buy from if we are to buy from this trend. Remember what you saw on the daily time frame that the market is in a downtrend, but on the 4 hours time frame, the market is in an uptrend, meaning we are going to look at for demand zone on the 4 hours time frame. Now, at our market demand zone here, and what we are waiting for now is for price to come back to this zone and we buy from this zone. But price have already gotten this zone and price has failed this zone. So what I'm going to do right now is go to the 1 hour time frame and refine this zone to become a point of interest where we're going to likely sell from or buy from. Now, a point of interest is simply an area where you're likely going to buy from or sell from. And now there are basically about three types of point of interest. We have the point of interest caused by a flip zone. We have the point of interest caused by a demand zone. And we have a point of interest caused by a supply zone. But right now, the 4 hours time frame, we're able to identify a point of interest caused by a demand zone. Now, if you have to define it, once a demand zone or a supply zone fails, that supply zone become a point of interest caused by a flip zone. Now, because it has failed us here, it has now become a point of interest caused by a flip zone. So we're going to go to the 1 hour and refine this point of interest to see where I'm likely going to buy from because it's a demand zone that turned to a supply zone. Now the 1 hour for me is not a high time frame, and as well is not a lower time frame. Now, identifying this demand zone here that failed, you can clearly see that if we find this demand zone here, this point is our demand zone, and when price got to this point here, price failed. So this demand zone now is no longer a demand zone, but rather is a supply zone. So you're looking for price to come back to this zone. You're looking for price to come back to this zone here, and will likely sell up from this zone. Now, if you look closely here, price have already gotten to that zone, and what the price do, as you can clearly see, price first of all engineered liquidity here, and then as well price give us liquidity here. So if you're looking to sell from this zone now, what we're likely going to do for now is for us to wait for price to come into this zone and take out this liquidity that price engineered here. Or we can still go aggressive by simply selling from this particular area price is. But if you want to be conservative, you simply have to wait for price to come back to this zone here, and then you sell off. So what I want to do is to wait for price to come back to this zone, put our stop loss this above this swing here, and possibly wait for price to come back into this zone here and sweep this liquidity off, and then price begin to go down, take this liquidity here, and possibly go for the higher time frame liquidity, which is this one that is here on the daily time frame. So this will be a possible entry for me on USD come this week. And if you follow this step by step, you'll be able to understand how to analyze the market as a new beginner. I think that will be all for this video. You see me on the next video. Peace.